Welcome back to First Trades. Joining us now is Mr. S.K. Bajpai, Senior VP and CFO at GSFC. Mr. Bajpai, hi. Thank you for joining us today. Give us a sense of your fertilizer margins and what kind of pressure did you see during the quarter?
Yeah, fertilizer business was good, and overall profit, if you see in the quarter one versus quarter one last year, YOY basis, it is 64% growth in the sales to 3583 crores, and profits have been also increased by 11% and 14% PBT and PAT. PBT has reached to 205 crores and PAT to 159 crores. So overall, if you see the profitability during the quarter, it was very good despite the challenging global environment where the raw material prices were very high. There was a little bit correction in the fertilizer segment profit. However, IP industrial product segment performed very well, and that's why this result is very good in the quarter one.
Absolutely. And that's exactly what I wanted to talk about, Mr. Bajpai. Given sulphur, ammonia prices, the fact that they've more than doubled, how much of this cost pressure have you been able to pass through via pricing and DAP sales? And how much do you think could be more in the offing if prices don't settle down for these raw materials?
Yeah, you are absolutely correct. In case of sulfur, it is 231% hike. In ammonia, it is 144%. Even in the natural gas and other raw material, it is more than 38%. In benzene IP segment, it is 38% increase in the raw material prices. And it is very difficult to sustain the pressure of the raw material because of the global environment. If you see the Ukraine war in Russia and this Middle East crisis, so there is a lot of increase, big increase in the raw material prices and also in the freight cost. So this has impacted our costing, but we have, however, managed the thing because we have integrated plants. So we are switching from one product to others, and on daily basis we are monitoring how we can maintain our profit and how we can sustain the pressure of the raw material prices. But in the coming days, it will be a challenging for us. It will be a big challenge for us in the quarter two that how we will manage, because in the fertilizer segment, government has kind enough to compensate as far as urea and DAP is concerned. So there is a special package announced by the government of India that is up to September. So after September, we have to see how government will come out for the next season in Rabi season, starting from the October to March.
Sir, if you can also give us a sense of the kind of benefit that you get from that package, especially with respect to DAP sales, which government has come out as a special package, and going into the next sowing season, do you expect if the current scenario in West Asia continues, this package is expected to be extended?
Yeah, I'm very hopeful that this package will be extended because DAP prices is unfortunately or fortunately it's not risen as the raw material prices like PA, sulfuric acid and ammonia has risen. So still the DAP pricing is around $930 per metric ton in international market. But manufacturing cost of the DAP is much more than the DAP international prices. So government compensates us fully if we import DAP and give 4% margin to that. So we are protected from the government side, and that will make us comfortable in providing the DAP to the farmers in the Rabi season also.
Mr. Bajpai, the other thing is this fairly large Capex program which is currently underway at Sikka, right? What is the expected timeline for this to come online, and how is it that you're funding it?
Yeah, our Sikka unit, we are proposing a PSA project, but there are certain other products also we are embarking upon, and there is a Dahej development complex we are targeting at, where the some project will be lined up. And yesterday in the board meeting, we had got in principal approval, and we will go for the technology suppliers and the firm of the financial model. And then after we'll come to the market with the full swing of the new projects. However, as far as PA as a project at Sikka is concerned, it will take at least 3 years to complete. We are just opening the bids, and we will finalize and start our development work at Sikka.
Hmm. And how are you managing the natural gas prices, which went up nearly 38% during the quarter? Do you think the cost structure is there to absorb this kind of increase in gas prices, or you hedging it again, hedging it with terms in terms of long-term contracts for the gases?
Then there are some long-term contracts as far as the NG pricing is concerned. But whatever the spot purchase we have to make from the market, that is coming at a very high price. So, in case of urea, it is absorbed by the government tips by way of subsidy. But in case of other products like melamine, where we are using the molten urea to manufacture our melamine product, that is really a problematic thing for us because international prices of the melamine does not support this kind of increase in the natural gas. And as far as global conditions are concerned, the RLNG is not coming frequently from the Hormuz still. So there is a high, continuous hike in the energy prices. That's why I am saying that the quarter two will be a challenging for us, how we have to meet. But we have integrated plants, so we have to, if we set our melamine production, then we have to switch to some other product. So that facility is available in our complex at Fertilizer Nagar, Vadodara, and by this way we are managing the things.
And also, can you give us a sense of the kind of outlook that you have for the upcoming Rabi season? Because rains have been delayed, and now it's we'll still end up with a deficit in rains. How do you see the visibility for Rabi crop and the demand for fertilizer there?
Yeah, fertilizer demand is good because due to the raw material increase in the price increase, the NPK production is little bit less in India. So the whatever DAP and other products we are getting from the international market, we are providing it to the farmers. But in the July, the rain season started, and it is a good signal that rain deficit will be curtailed. And I think that there will not be any problem in the fertilizer demand. But really, challenge is to how to support the market and to provide the required fertilizers to the farmers at appropriate time. So that will be the challenge in the quarter two.
Right. Okay, Mr. Bajpai, great to have you today on ET Now. Thank you so much for your time.
Thank you.